Today I just want to give you a quick lesson on tax and how to legally reduce it through the use of additional super contributions. The first thing to bear in mind is it's 2026 and the maximum you're allowed to put into super each year is $30,000. That includes what your employer puts in. So if you're on $100,000, they're putting in a mandatory 12%, so you're getting $12,000, and you could make up the difference to $30,000, which would be an additional $18,000. There is, of course, an extra little bonus at the moment where you are allowed to play catch up on the last 5 years, as long as your superannuation balance is below $500,000. So if, for example, last year you did only put $12,000 in, you could use another $18,000 from the previous year as well as your caps this year. Now, the tax brackets for an individual are 0 to 18,200. You don't pay any tax at all, completely tax-free. Then your next 18,200 to 45,000 bracket charges you tax at 16%. This is actually decreasing to 15% next financial year and potentially 14% the year after. But it's roughly equivalent to the same rate that super pays when they receive a contribution into your super fund and they have to take the tax out, known as the concessional rate. The next bracket is 45,000 to 135,000, and that's at 30%. As you can see, that's about 14% higher than the bracket before, but also another 15% higher than if you were putting the extra money into super. Then at 135 to 190,000, the tax rate is at 37%. And then every dollar above 190,000, you pay tax at 45%. There's also a Medicare levy to pay on top of that, which can be up to 2%, but I won't dwell on that in this video here. Now, just as an example, I always think in an ideal world, you only really want to be paying that rough 15% tax rate that super pays. So if you have got some catch-up contributions, for example, if you'd earn $100,000 or you're on track for $100,000 this year, in an ideal world, it would be nice to bring it down to a taxable income of $45,000, meaning the highest amount of tax you're going to pay is that 16% between $18,200 and $45,000. Now, if you had the catch-up contributions, it means if you were to pay $65,000 into super this year, that $65,000 is only going to pay tax at a rate of 15%, the concessional tax rate for super, rather than 30% putting it into your bank account. Obviously, there's a lot of numbers here. This information is available on my website. And if you want to discuss this and how this might actually affect your situation and what you can do to take advantage of the current rules, feel free to get in touch with me, either booking an appointment directly in my calendar or giving myself a call. Thank you.